As Jamaica continues its post-Hurricane Melissa recovery, the government is turning its attention to strengthening the financial sector.
The financial sector can significantly help to power up the recovery. Yes. The sector will need some targeted reform to be more agile.
Among the first areas of focus, pension fund investment rules. The proposed changes are aimed at unlocking more long-term capital for private sector development.
We anticipate that together with the Financial Services Commission, we will take a small but consequential step to increase the pension fund private asset limit from 5% of total assets to 7.5% of total assets, subject to supervisory monitoring, and in the absence of any unforeseen adverse consequences, we will complete the second phase of this increase to 10% by April of 2027. Under the first phase of this change, an additional $21.2 billion of long-term capital will be allowed to be invested in private companies.
The reforms extend to the exploration of adjustments that would give institutional investors greater flexibility in how they manage foreign investments.
By early in the new fiscal year, working with the FSC and the BOJ, we should be in a position to increase the foreign asset limit for pension funds and insurance companies from 10% to 15% of total assets. The additional 5% will be restricted to foreign currency denominated securities issued by locally domiciled issuers.
At the same time, policymakers are reviewing existing regulations to make it easier for insurers to invest in corporate debt, all while still safeguarding the stability of the financial system.
Under the current interpretation of Regulation 47 of the Insurance Regulation, insurers may invest in corporate debt only where multiple prescriptive conditions are fulfilled simultaneously. We will simplify Regulation 47 so that insurers can invest in corporate debt where either of two objective criteria is met. The revised framework will permit investments where instruments are secured by adequate collateral and bear fixed interest, or where instruments are issued, secured, or guaranteed by a solvent company assessed to be investment grade by a recognized rating provider and that meets a 2x fixed charge earnings test over the prior 2 years.
Other changes will examine how securities dealers operate, how investment funds are structured, and how financial institutions manage risk.
First, we will review the capital adequacy framework for securities dealers in an effort to remove any elements that discourage intermediation in government and high-quality corporate securities. Second, we will introduce a risk-sensitive concentration framework for securities dealers, pension funds, and insurers that place greater emphasis by issuer quality and asset class rather than relying on blunt, uniform caps. Third, we will examine the repurchase agreements framework with a focus on allowable assets and eligible collateral. And finally, Madam Speaker, we will look to reform collective investment schemes rules, exploring the efficacy of unit holder limits and liquidity management.
Among the slew of reforms is the primary dealers system. Through this arrangement, primary dealers act as market makers, facilitating the trading of Government of Jamaica and Bank of Jamaica securities. The system helps keep the market active, strengthens investor confidence, and ultimately helps reduce the government's borrowing costs.
The reform of the current primary dealers system remains a key strategic objective of the government, as well as a well-functioning primary dealers framework is essential to the continued development of the domestic debt market.
The administration also plans to introduce new financial instruments, giving investors more options and improving the government's ability to raise funds competitively.
The introduction of new instruments is expected to improve liquidity and flexibility, allowing investors to match products to their cash flow needs and risk preferences, while offering the government more competitive funding options.
Technology will also play a role in modernizing Jamaica's financial landscape.
The fixed income trading platforms will establish a centralized and standardized framework for the listing, trading, and management of Government of Jamaica's securities. The implementation of the platform is expected to reduce transaction, settlement time, and counterparty risks, and increase participation by both domestic and international investors, thereby broadening the investor base, strengthening price discovery, supporting the development of an efficient yield curve, and enhancing liquidity in the secondary market.
For consumers, new digital tools are on the horizon to facilitate greater transparency within the financial sector.
A new comparison website is scheduled for launch this year. The platform will allow consumers to easily compare banking fees, charges, and interest rates across financial institutions. The development of this site has been approved, with focus group testing and marketing campaigns planned ahead of its rollout.
A centralized digital verification system is also being developed to simplify customer onboarding and improve access to financial services.
It will expand financial inclusion and reduce paperwork. The system will function as a secure, centralized digital gateway for identity verification and customer due diligence, enabling banks to onboard customers more efficiently through a single access point.
Even as reforms take shape, the government continues to strengthen Jamaica's financial resilience, particularly in the face of natural disasters.
The government intends to renew the CRIF insurance policy. The government will also maintain savings in the NNDRF, the NDF, and contingency funds, as well as seek to renew contingency credit lines to bolster our risk retention capabilities. The government will also continue to explore other instruments to build structural resilience, thereby mitigating potential damage from natural disasters.
Jamaica's strong credit ratings continue to signal stability and confidence in the country's economic management and fiscal prudence.
Our current ratings stand at Moody's BA3 with a stable outlook, S&P or Standard & Poor's at BB, also with a stable outlook, and Fitch at BB- equally with a stable outlook. These credit ratings are our oil. They are our gold. All of these reforms that I've outlined for the financial sector have one aim, Madam Speaker, to make the financial sector work better for the Jamaican people and the businesses, full stop.
With these reforms, the government is seeking to strengthen the financial sector's ability to support investment, expand access to capital, and drive economic growth for years to come.